Hi all, and welcome back to our weekly overview of the cryptocurrency market on behalf of Apex Signals. At the end of last week, when we spoke last, we were a couple of days into a sudden return to a bull market for cryptocurrencies, and one of the big questions was whether that would be able to hold into this week. And as you can see here on the global total market capitalization chart, we have held on to a positive trend, which is a very good sign. So we can see today on the right hand side of the chart, we're up to 300, just above actually, $349 billion overall market cap, which is a significant improvement on where we were last week. And we've had a general and smooth rather than volatile upwards trajectory. We've had a couple of little peaks and troughs, but overall it's been quite plain sailing. So the big question now is really if we can hold on into next week and move towards the 400 billion level, and that's a question that I'm personally unsure of. There's arguments for and against, and we'll discuss that as we go on today. But it looks like, and I was relatively skeptical about whether this was actually the case, but there was a lot of people talking about whether the US tax season was having a negative impact on cryptocurrency markets, and the argument was that a lot of cryptocurrency holders were cashing in order to pay taxes due, and with that finished, there was speculation whether it might not lead to an upturn in the market. Now, whether it's causation or correlation, I think it's difficult to tell, but it has very much proven to be the case that an upwards trend or a new bull trend has coincided with the end of US tax season. So for me, it will be interesting to see this time next year whether we see a similar pattern, and if that is the case, then we can put the question to bed and say it has been an influence. But I think on a one-off year at the moment, it's difficult to tell. Markets weren't quite as high over the past few years, and they weren't as mainstream, so that's not really a good comparison either. So let's remember next year to check out whether we see a similar level of correlation. Again, my personal opinion is still probably that the biggest influence has been the quietening down of bad news in terms of regulatory crackdown and other factors, such as the big Bitcoin sale from the Mt. Gox administrator. But there's certainly enough of a hint now to pique my interest, so I'll definitely look back again next year. If we move on now to Bitcoin, this is the weekly chart, so we can see over the last 7 days, and Bitcoin's price is currently up to 8,240. Now that's not a weekly high actually. We can see here on Monday in the middle of the chart that we were up to 300 and looking at the figures for the overall market capitalization, we can see the Bitcoin's Monday high was 8,370, which is actually slightly above the price at the moment. And if we go back to the overall total market cap, for me, we can see here that for overall market cap, we are now at a high for the week, which is actually significantly above where we were on Monday. And that's, I think, indicative of the drop in correlation between Bitcoin price and overall market cap. We've seen since the beginning of March that the dominance of the overall market from Bitcoin has dropped considerably, and it's down to 40% from 45%. And 5% might not seem like a huge number, but over such a short space of time, it's actually massively significant. And as well as that, we've seen over the last week that Ethereum and a lot of the other altcoins have actually seen bigger gains than Bitcoin. And I've been saying for some time now that I expect Bitcoin's dominance of the cryptocurrency market to gradually wane over the course of this year. We'll look shortly as well at the Bitcoin cash price, and I think that's another interesting indicator or point within the same broader question. We'll also have a look at the Bitcoin 3-month market, or 3-month chart rather. We can see quite a lot of spiky volatility here. And if we go back to the overall market chart, we can see that while there's still a little bit of volatility here as well, it's nowhere near as pronounced as the Bitcoin volatility. And I think that's again a positive indicator that we're starting to move away from the total dominance of Bitcoin on the overall market. It's going to be, I think, for some time yet still a bellwether and the main driver, but it's certainly lessening in its overall influence. Again, if we have a look here at the Ethereum chart, this is a 3-month chart, and in comparison to the Bitcoin 3-month chart, we can see here on the left, in January there's some significant spikes of volatility. But again, if we look at the Bitcoin 3-month chart, that volatility is apparent all the way through, and we quickly switch back to the Ethereum chart. It's a much smoother line. So we've seen the same downward trend over February and March as Bitcoin, but with less spikiness. And also, if we look to the right of the chart, the upwards curve is significantly smoother than what we can see here for Bitcoin. And I think that's all indicative of Bitcoin running into some difficulties in terms of its overall dominance of the market. Personally, I think that's a good thing, but we'll see how it pans out over the next few months, and whether my prediction of continuing drop in influence turns out to be the case. Now, if we go to Bitcoin Cash, we can see a huge spike over the last couple of days here on the right hand side of the chart. So around this time yesterday, Bitcoin Cash was at $835, and today it's at $947, which is a gain of over 14%, which is obviously extremely significant. And there's a lot of talk about Bitcoin Cash gradually gaining more traction, and I was skeptical whether the hard fork would have legs and how long it would hold on for, but it very much seems to be the case that it does have legs. And I think it's not we've not concluded the question yet around which of the two sides of the hard fork will finally become the dominant one. Obviously, Bitcoin still has big scalability issues and the well-publicized problems with transaction times and transaction costs. And while the majority of miners are still staying loyal to Bitcoin, if Bitcoin Cash manages to hold on to its current trajectory, then that could start to change. And as many of you are probably aware, and those of you who aren't, you do a little bit of research on this, the loyalty of miners is absolutely key to the success of any cryptocurrency, but particularly Bitcoin, and particularly within the context of the rivalry with Bitcoin Cash. Now, if we move back here to 3-month Bitcoin chart, where there's a lot of industry talk around whether we're back into a bull market for cryptocurrencies. And if we have a look at the overall market cap here, that's 7 days. Unfortunately, that's not the one we want. The 3-month chart still shows a general downward trend. It would be great to be able to look at a 6-month chart in that context, but it's not particularly relevant in my opinion due to the massive bull run and what has to be termed a bubble, which took place at the end of last year. So I think what we're really looking at is from the beginning of this year onwards when that correction hit home. And I do think we can still see an overall downward trend. If you look at the highs, they're gradually lower over this chart. However, the lows are not, which throws things into question. Now, there's been some analysts coming out and saying that they think the 6,600 low of February, which you can see here on the chart, towards the beginning of February, being the bottom of the year for Bitcoin, and a lot of people now starting to say that what we've seen over the past week or week and couple of days might be a new bull run, and predictions are for 15,000 later this year for Bitcoin. Now, I think we really need to see another few weeks of sustained upward movement before we can call an end to the bear run that we've seen over the last couple of months. I'm not going to jump on the bandwagon just yet in terms of predicting a new bull run heading up. It may well be the case, and I hope that it is, but I think that we have to see some longer period of that being sustained. Another 2 to 3 weeks, I think, will be necessary, and sustained break above 9,000 and 10,000, and then we really might be back into a longer term bull market over the next few months. But I think 1 week at the moment is, although you can see on the chart the movement over the last week has been smoother upwards than the shorter term peaks that we've seen over the rest of this year. So it's not been as sharp, which is a good indicator. But if we can keep a smooth upwards movement over the next couple of weeks, then I'll be ready to get on board. But for now, I think we have to wait and see. So we'll speak again next week, and hopefully we'll be above 9,000. That's my hope. Whether it turns out to be the case, we will have to wait and see. So enjoy your trading. Wish you success over tomorrow and the weekend, and we will chat again next week. And bye for now.